think you would have all received the Outlook document, the Outlook release. Yes? Good, okay, excellent. Marie's going to take us through that in a little bit more detail in her slides. And we'll do that for about 20 minutes, and then we'll take some questions after that. When we get to the question time, we are able to take questions in both Spanish, Portuguese, and then we'll hear it in English here. Everyone has translators here if you need that service in the opposite direction. I think if you're listening in Portuguese, you should see red on your headset, and if you're trying to listen in English, you'll see green. So with that, Marie, I'll turn it over to you.
Mic on. I'm a little bit height challenged, so I'm struggling to see my slides, but hopefully it'll work out. So obviously we're facing this incredible double crisis. So we both have an oil crisis, and we have on top of that a refining crisis. And on this chart you see in blue the jet fuel prices, in red the Brent crude oil prices, and in yellow the difference between the two. And you can see how the jet fuel prices have risen a lot more than the Brent prices. So that goes to my point about this being a double compound crisis. And the crack spread, the difference between the two then in yellow, I think it's maybe worth pointing out that there's a bit of a structural break somewhere around 2022, because up until that point the crack spread was usually between $0 and $20 a barrel. And since then you can clearly see how the $20 mark has sort of been the bottom of the new range. And we had the crazy $60 crack spreads in around that 22-23 period, and then it sort of returned to something that looked somewhat more normal, and then shot up to over $100 a barrel momentarily in 2026, and now we're hovering somewhere around 50. And our forecast for these prices are as follows. We are expecting an average jet fuel price of $152 a barrel for 2026, an average Brent price of 95, sorry, momentary brain freeze there. 95 is the projected Brent price, and that would give us an average crack spread of $57 a barrel for 2026, if we are right. It could obviously go up, and it could also go down. In any case, this is a very new environment, and that's the central point here, that we've gone through some kind of shift already around 2022, and this has now been exacerbated by the war in Iran. And these higher oil prices will have an impact on growth, because a higher oil price leads to higher prices across the whole economy. It does this because the whole economy depends on fossil energies. Yeah, fossil energy today represents more than 80% of global total energy consumption, and that leaves something less than 20% being filled by renewable energies. So when the price of oil goes up, as it's used by absolutely every industry in the world, it will push all of those prices up. And this is what dampens global growth. We can maybe approximate the relationship as follows. We might think that a $10 increase on the Brent price could shave off 0.1 percentage points of global GDP growth. So $50 more on Brent would be half a point off on global GDP. And that's, in round figures, what we're expecting, that the world will go from the previous 3% global growth to something much closer to 2.5%. And obviously, should the oil price rise further, then it will go lower still. And we can debate, what feels like a recession, but I would nevertheless personally say that if global growth approximates 2%, then that's pretty much a recessionary environment. So we're going from 3 to 2.5, and hope that we will not go any lower than 2.5. And all of these higher energy prices, as we said, will feed into all the products, and therefore consumers will now have to pay more for almost everything. And that eats into households' disposable incomes and their purchasing power. So at some point, consumers will have to make different prioritizations and different choices. And this, I think, is the real fragility in the global economy in the current context. Is like, when will the consumer decide that this is no longer a time to spend? And if that day comes, then we have a much higher likelihood of going lower than 2.5% in terms of global GDP growth. So we know that the consumers, on the one hand, has held up a bit surprisingly well into this crisis, but we can see here that consumer confidence is already declining in many places. And again, should this sort of drop off the cliff, well, then we might have, a source of downside risk to our global outlook. And money is also being used in different ways, not only by consumers, but also by governments. And governments are committed to spend a lot more on defense. So this is what you see here. And the dotted line is the 2035 NATO commitments, for instance. And military spending can have a positive effect on growth in the short term and in the near term, because it does generate some form of output. But it's not a particularly useful form of output. We would rather spend government money on things like education and health and infrastructure and so many other things. So this spending comes with a very high opportunity cost, and it will hurt long-term growth potential. And that's also obviously not good for anybody, and certainly not good for our industry either. So I think that's very important to understand that as the number of conflicts increases around the world, the military spending increases, and this damages our long-term growth, if not our short-term growth. Now, we have a little bit of a silver lining, maybe, in terms of the fact that the US dollar is not the safe haven it used to be. So it used to be the case that no matter what kind of difficulties the world encountered, and even if the US were the source of those difficulties, the dollar would always benefit, because investors would, in a high-risk environment, prefer to be in dollars than in any other currency. Now, that is no longer the case, certainly not to the same extent as it used to be. So that's an advantage for any country that has a currency that might have strengthened against the dollar. So if you have a strong currency and you're paying your fuel bill in dollars, as most people are, then your local currency price is lower thanks to your stronger currency. Now, this is obviously not true for everybody. A lot of countries have currencies that have weakened against the dollar, and they, on the other hand, experience a double impact then of the higher oil price plus their own weaker currency, which increases the local currency price of those dollar imports. But nevertheless, generally speaking, a weaker dollar is good for the global economy and therefore good for our industry in general. So the impact of this crisis on our network has been pretty immediate. And I think that this is something maybe that a lot of the general public doesn't really understand. How the global network reconfigures instantaneously in response to any crisis anywhere. And it ripples across the system. No area of the global air transport network is insulated from the impacts of trouble in any other part of the global network. So here we can see that on this specific route, which has been the dominant route in terms of the traffic generated in the Middle East, the Asia-Pacific European route, that has gone from 26% being satisfied by Middle Eastern airlines to currently only 13% being satisfied by Middle Eastern airlines. And instead, it is the European airlines and the Asian airlines that have stepped in and taken some of that traffic away from the Middle Eastern airlines, not by choice, but by war, so to speak, as the Middle Eastern airlines were not able to satisfy that demand. And yeah, maybe we'll come to that later. I'll leave that for now. So the other thing to understand, I think, is that these crises, just like everything ripples across the global air transport network, these crises don't go back to where we were. Yeah, and I don't really know why, as human beings, we insist in talking about how things are going to go back to normal, because they never do. Yeah, every crisis brings with it a certain amount of permanent impact, and then the next crisis comes, and the next crisis comes, and it just sort of layers like a 1,000-layer cake. And this is the supply chain disruption. Whoops. The supply chain disruption that we're still experiencing is an overhang of the COVID crisis. Now I am seriously challenged in terms of the clicker, but maybe we can fix that and I can still keep on talking. So the COVID crisis created a serious disruption of very many supply chains, including our aircraft supply chain and everything relating to aircraft. And it has not been resolved yet. It still lingers. And the fact is that we then do not get the deliveries of the aircraft that airlines had on order. And the fact that we don't get those deliveries has lots of implications. One of the implications is this one, that we now have a backlog of over 18,000 aircraft that have not been delivered, and 18,000 aircraft is more than half the active fleet. Yeah. So just to give you an impression of how serious this problem is. And when we don't get those aircraft, the whole system becomes less efficient. We increase our costs on everything, and also we are still talking about the supply chain. Yeah. Maybe I'll get the clicker back soon.
Sorry, batteries.
Okay, let's see if we can get back to where we were. Yeah. Okay, we got that one. Right. So this is where we were. Yes. So here you can see that deliveries in 2026, as far as we're expecting at the moment, are still not at the level of the deliveries that we had in 2018. Yeah. So that's a real problem with deliveries. And then the way this forecast works is that it just pushes out the non-delivered aircraft to the next year. So it's most unlikely that we will get all of those projected aircraft in 27. That I don't think that's going to happen. So we're clearly not getting the deliveries, and this means that airlines, when they order an aircraft today, they have to realize that it's going to take up to 7 years before they get that aircraft, whereas before it might have taken 2 to 3 years before they get the aircraft. So you really need to be, clairvoyant, yeah, as an airline CEO, to know what the world is going to look like in 7 years' time and what aircraft you're going to need when that time comes. And this is what we said about the total backlog, which is just absolutely astonishing. And I am very grateful that you're taking pictures. And for those who don't take pictures fast enough, I'm sure we'll share the slides.
Yeah, the presentations are all on the website.
Yeah, perfect. And the other thing that the slower deliveries results in for our industry is a halt in the fuel efficiency gains that we have delivered as an industry every year without fail since 1944, basically. So it's hard to see the red line and the differences in the red line, which is the fuel consumption. But it's the fact that that improvement has stalled since 2024. So here we are trying to decarbonize our industry, and we're not getting the support that we need from our aircraft manufacturers, and that fact impedes our progress towards decarbonization. And it also, again, pushes all our costs up, because Now we have a fleet that's 15.2 years old on average, whereas it used to be 13.7 years. And of course, with older aircrafts come more maintenance and all kinds of associated issues. So this is a serious problem, which is a serious overhang from the COVID crisis, and it hasn't gone away. I use that as part proof of our expectations that the consequences of this fuel crisis are also not going to suddenly vanish. What this does to our traffic, we think, is that it is obviously dampening traffic growth. So we can see how we regained sort of the 2019 levels somewhere around 2024, and we were starting to climb above that level, and now within the blue oval you can see the dent that has been caused by the war in Iran. But it's still above that 100% index line, so everything is relative, right? And the regions that generate most of the traffic growth in the world is actually the Asia Pacific region, even if the percentage is not the highest percentage. Yeah, so obviously that depends on the size of your market. Yeah, so a small market such as Africa has a very high percentage increase, but it's from a very low base, unfortunately, and Africa, sadly, is still basically stuck at 2% of global traffic, which is an outrage given the size of that continent and its potential. Now, the big change, of course, here is the Middle East that used to generate positive demand growth, and this year we're expecting demand, not being able to be catered to by that region, and that explains that 11.4% drop. And for the industry as a whole, we're expecting 2.1% growth in passenger traffic. So that's half of what we thought in our December forecast, yeah. So half of what we expected before this crisis intervened on the 28th of February. And regarding the cargo demand, it's a similar picture. It is still Asia Pacific that generates most of the growth in cargo demand, and it's still the Middle East that is the most heavily impacted by these events. And for the industry as a whole, we think that this will mean a growth of 0.7% in cargo traffic in 2026. And here you have observed figures rather than forecasted figures. Yeah, so this is what we saw over the period January through March in terms of actual growth in RPKs and CTKs. So these are obviously revenue passenger kilometers and cargo ton kilometers per region. So again, same observation regarding Africa, that those strong numbers are from a low base, and Middle East is still the most heavily impacted. And I think also notable how tepid the growth rates are in North America. So of course it's a mature market, and we would expect slower growth in mature markets, but it's quite noticeably less growth in North America than in Europe, for instance, which is also a mature market. So there's something happening in North America which is holding back that traffic growth. So a consequence of the lack of aircraft in the industry is that the load factors get pushed up, just sort of mechanically. And the world is now seeing the highest load factors, passenger load factors that we've ever had. So 82.6% load factor is what we're expecting for 2026. And you can see the regional distribution, obviously, and how Africa, again, is this structural laggard in our industry, most unfortunately. And cargo load factors are lower, so I wouldn't sort of compare cargo load factors with passenger load factors. A lot of cargo airlines might be full out and not so full coming back, so don't compare 82 with 46. 46 is a high load factor in the cargo space. So 46.2 is what we're expecting for 2026 for the industry as a whole. Now, that obviously helps our financial performance, the fact that we have these high load factors, but our financial performance is still, I don't want to say pitiful, because it's just amazing that airlines can still make a profit under these circumstances, but relative to other industries, we're still a low profit margin industry among low profit margin industries, lower than most. I actually managed to find food wholesale, just to have somebody who's not doing, that's doing even worse than we are. And I have to point out that this is not a like-for-like comparison, because it's our forecasts for the whole industry in 2026, the 2%, and I am showing that next to observed numbers for the US here. So the other industries are all US industries, and that was in 2025. Nevertheless, it gives us an idea of the distribution of profits across industries, and obviously financial services and oil and gas make a lot more money than our industry ever has. We've never had a net profit margin higher than 5%. Just saying. So that 2% net margin is equal to a 23 billion profit for the industry. That's about the size of a quarterly profit of a single oil company in some years. So we can see the incredible hit that we took to profits in 2020, of course, and how it has, impressively come back. We were on a really good trend before the Middle East crisis hit, and now we are again halving our forecast compared to what we thought only 6 months ago. We were expecting 41 some billion previously, so. And where does this money come from? The money that does come, where does it come from? It comes mostly from the passenger side. So that's the big block in blue. And in yellow you have ancillary and other types of revenue, and in red you have cargo revenue. And again, it's a bit hard to see the evolution in these blocks, but the yellow one is actually increasing and starting to catch up with cargo. And cargo is actually holding up pretty well, still generating not as much money as it did in the crazy COVID years, but still holding up at generating more revenue than it did in 2019. So on the cost, that was the revenue side, and turning to the cost side, we thought, previously that we would be somewhere around 27% maybe in 26, and now we think that we will be at 31% of total costs in terms of our fuel bill, and that's what you see in blue. And in red you have employee costs, and these two components usually make up about half of the industry's costs. Now it will be a bit more than half. Aircraft ownership is very expensive these days because of the backlog of the airplanes, and then obviously all the other operating costs are increasing as well, as we have it, said several times here, that the higher oil prices feeds into higher prices on everything, and therefore the other operating costs are increasing as well. So per region it gives us this picture, and in the bars you read them on the left in billions, and the lines you read on the right in percent. And you can see how the Middle East was really doing very well previously and is now being very severely hit by the current crisis, naturally. And then you see the distribution across the other regions, and of course Africa still stuck at the end. So if we were to abstract from this current crisis, then the distribution of profits like this, I think, is a good approximation of how good the operating environment is in that region. The Middle East has a stellar operating environment prior to this crisis, and Africa is the region that has the most complicated operating environment, and that obviously impacts on the possibility for airlines in those regions to make any profits at all. And this 23 billion profit for the industry and the net profit margin, if we divide that by the number of passengers in the world, we get $4.50. So per passenger, the industry profit forecast equates to $4.50. And we are always interested in thinking about what we might be able to buy with that money. And in Rio, you can buy a pound of queijo and a bottle of water. So that is, you wouldn't survive very far on that. Certainly not if you're running a marathon. You would need a bit more than that. And so here we're giving you lots of other numbers. I'm not going to go through them all. So the revenues go up by 9.5%. So we have revenues in excess of $1 trillion. And the reason why the revenues go up so much in spite of the weak traffic growth is because of the high fuel prices. Because obviously airlines need to try to recuperate their costs, so some ticket prices will increase and that brings in more revenue. But unfortunately, on the expenses side, the expenses are rising more quickly than the revenue. And this is how we end up with this net profit margin of 2% and 23 billion and the 4.5 per passenger. And maybe it's interesting for you also to take note of a couple of other assumptions we make. And one is that we expect a SAF price of 2,872 per ton. And we also are under obligation to buy CORSIA EEUs, and we expect that this year this will cost airlines somewhere between 1.2 and 1.7 billion, just FYI. And here you have the summary of all of the statistics, and that is for your reference, so that you have the numbers in a convenient format, and otherwise you will find all of that information also in the Global Outlook. And with that, I thank you for your kind attention.
Great. Thanks very much, Marie. And just on that, a reminder, if you have received the Outlook release, there is a link to the Outlook document, which is about 40 pages worth of reading, which includes all of those wonderful charts, graphs, and numbers. So plenty of stuff to keep you busy with industry insight. Yes, on your long flights home. In the meantime, we have an opportunity for questions to shortcut all of that reading. We'll start here and then we'll move to the other side of the room. And once again, just while the mic is moving over, if you do need translation, the translators are working.
Hugues Honoré with Agence France Presse. Thank you very much for this presentation.
Bonjour.
Bonjour. You've been very vocal here in Rio at the IATA on European Union regulations and maybe bad economic policies, but not so much on US ones. And we see that airlines in North America are less profitable now than European ones. And you see that you said that something is holding back growth on cargo in North America. So what is it? Is the US economic policy that optimal or not?
Wow. I mean, without going into the politics of things, I think, even an objective observer, the most objective observer, has to observe that US economic policies have been erratic since certainly the trade issues that we had last year, tariff issues, and so on. So I'm an economist, and I allow myself therefore to have some opinions on what we think are smart economic policies and less maybe efficient ones. And I think that when you keep changing the policy environment all the time and you keep everybody guessing as to what's going to happen next, it's not an environment that is very conducive for either businesses to invest in their businesses or for households to invest in whatever capital goods and so on that they might otherwise have chosen to do. So that I think has impaired the near-term economic growth in the US. And then I think, not having a very clear long-term strategy on things like energy is also detrimental to long-term growth. Yeah. So, you know, what kind of economic policies can you do today to foster economic growth, whether you're the US or anybody else? It's very limited. Yeah? You can't lower interest rates as far as you might want to, because then you might provoke inflation and you might cause sharp depreciation in your currency, both of which are not necessarily desirable. And on the fiscal side, there's very little room to do things either, because everybody's indebted to the hilt, and you know, nobody more so than the US. So there's very little room for doing anything particularly constructive on the fiscal side. So I draw the conclusion that the most efficient thing that people could do today to boost economic growth is actually to buy into the energy transition. And just like the Vice President said this morning, yeah, he said that Brazil has made, you know, he actually said the air transport industry, but I am allowing myself to lump the energy transition in with that, yeah. So if you adopt the energy transition as a state strategy and a vector for economic growth, and you combine the energy transition with using any kind of connectivity, including air connectivity, as a vector for economic growth, well, then you have a recipe for something that could be, you know, truly transformative. And I would say, again, I'm trying to cast myself as an objective observer, but the policy mix in the US is sort of harking back to the 1970s and is not particularly forward-looking. And I think that's problematic. And the European policy is you know, curiously turning inward, whereas they used to be, you know, the example of sound economic policies. I think that's most unfortunate. And then in Africa, everything is so fragmented that it's really difficult to get any traction on anything. And it's absurd in Africa that Africa trades more with far-flung continents than they trade with themselves. That's obviously a policy failure. So that's sort of what I'm seeing, not only as it pertains to our industry or any particular region. My conclusion is that we're seeing this radical policy fragmentation, and that is impeding both current and future growth for all of us everywhere.
Okay, thank you for that fulsome answer.
I'll try to be shorter from here.
We have about 10, 12 minutes left, so we'll try and get a few more questions in. Maybe we'll go to one on this side, fourth row from the front. Yeah, the gentleman with his hand. Yeah, that's right.
Hi, good afternoon. Igor Pires from Diário do Nordeste. It's nice to see Latin America with, I think it's a nice rate of growth. Like, I think I saw something 5%, 8%. If this trend is about to continue in the next years, the first question. And I saw a really restricted example of an European carrier that told me that Brazil could, I'm not saying it's like something happy to be happy about, but Brazil could surf in this redistribution of traffic that you showed in your slide because of the problem in the Middle East, but you only talked about European and Asia, right? If you could say that Latin America will serve this trend of redistributing this traffic, if we could have an extra growth in attracting more tourists, wherever, if you see that to Latin America as well.
Yeah, I mean, you know, to the extent that we clearly observe that any impact anywhere in the global system does ripple, you know, so if you now have a region that is not catering to the passenger demand as they used to, you could definitely make the argument that it will benefit everybody else. Yeah, so this is definitely a case where the, you know, where the pain in the Middle East will benefit, I would argue, everybody else, but it will notably benefit the Europeans and the Asians because they are the ones that are directly taking the traffic that has been lost to the Middle Eastern airlines on the Middle East's heaviest route. Yeah. And then the other routes, you know, will also find ways of doing things differently. And here I would say that, you know, things don't snap back yet. Should we have instant peace in the Middle East? You know, now people have already started to develop new habits. I mean, of course, nobody's going to necessarily want to continue to fly 20% longer routes if they can help it. But, you know, some of the traffic that has reorganized will not come back to the Middle East, I would argue. So that's, I think, something that maybe politicians also don't really realize. It goes in the same vein of what we've been saying here, that you have a crisis and people somehow think that things are going to go back to normal, but they never do. Once you've destroyed a route, so to speak, yeah, it takes a lot more money to try to get that route back. So yes, you know, the pain in the Middle East will benefit the other regions to some extent, most immediately Europe and Asia, and I would argue that some of it will even make its way to Latin America.
Okay, who wants to ask the next question? Maybe we'll take a question here.
Hi, hello, thank you. Leonard Beber from the Italian newspaper Corriere della Sera. I have a question about the airfares, because I saw the numbers in your document. You are forecasting an increase of 7% versus last year on a nominal side. But I mean, this year the airlines have used and have been protected by the fuel hedging. What do you expect for the 2027 in terms of airfares? And if you fear a level of demand destruction because of the higher airfares and because of the good profitability?
Right. Well, so first of all, we're a trade association, so I will definitely not say anything about pricing behavior of airlines. But I can comment on historic behavior, and I would say in general, sort of the industry has like taken half of fuel price increases on their own margins, no matter how small they always have been, and they have passed about half of the fuel price increases on to consumers. That's the historic average that we have observed. And then of course it's just the, you know, the most fundamental thing for any business owner is like, if you want to survive, you need to cover your costs. Yeah. So that's a necessity, and it's a necessity in every industry. So it's sort of mystifying to me that we're even asking ourselves that questions, you know, because costs go up, prices of the product has to go up. That's true in our industry as well as in any other industry. And the hedging behavior is like the US airlines in general have tended to hedge a bit less, and the Europeans have hedged a bit more. But you know, those hedges will also mature and evaporate, and there's not an airline in the world that's not going to feel an impact of the higher fuel prices. So that's the sad part. Now, you know, who will be able to fly at higher costs? Well, that's literally an income function, yeah? And you know, where on the income curve is the pain point, so to speak. And I think that this is something that if I were a regulator, I would be perturbed about, because I would want everybody to be able to fly. You know, the democratization that we've seen in air transportation is phenomenal. And, you know, the benefits of that have also been, you know, equally phenomenal. And clearly we should try to avoid policies that make this luxury industry as it used to be in its inception. So, and that in it of itself, you know, takes away growth potential, both present and future. So I'm sure that there will be customers that will be priced out of the flying market as a consequence of this.
Yeah. If you have a look at the Outlook release as well, we've been doing some polling of passengers to try and understand whether they expect prices to go up and whether they expect to spend more as a result of that. And there's some interesting results there, which shows that passengers do make that link between higher input costs and higher airfares, and are expecting to spend a bit more on travel this year. So we'll take a question in this side, yeah, third row, and then we'll come to this gentleman in the second row.
Hi, Mara Monte, Sole 24 Ore Italian newspaper. I would like to have an explanation, as you are an economist, because in Europe the fares, they are going down in this phase, despite the costs are going up. How do you explain this trend? And another question, if the Strait of Hormuz is going to open tomorrow, how long does it take to back to normal situation? Thank you.
Okay, thank you. So yeah, I mean, you can always find individual routes or strange behaviors. Things are not distributed equally, and so that's one thing. And the other thing is that our competitive environment is really strange. Our value chain is really strange, where airlines sort of sit in the middle here, and upstream it's all monopolies and oligopolies, and we don't have any means to influence, the prices. We're price takers, on aircraft and airports and all of this stuff. And downstream, we're in the most hyper-competitive environment that I am aware of. Please correct me if you can think of one that is more hyper-competitive, in that any person anywhere in the world can see all the prices all the time. And I always say this, I came from banking, and we would look at our screens all day long and the prices of things would go up and down, but we would never dream of turning that screen around and show the customer. So none of you, none of us have any idea of the margins that financial institutions charge, because we don't show the screens. But in our business, everybody gets to see all of these prices all the time. So it's very difficult for an airline to compete on anything other than price. And that creates a very peculiar necessity for them that can explain some odd pricing behaviors that you might see. And the other question was, how long is this going to linger? Longer, longer I think than many people think, because we already had the elements of the refining crisis present before this Middle East crisis. So, Europe has taken very odd decisions to close refining capacity, and by their own making, they have made themselves more import dependent, and particularly more dependent on imports from the Gulf region. So that was obviously not a very inspired decision when they closed those refineries. And it goes to the whole point about how it's all a system, and we have to think a little bit more broadly than just look at one refinery and say, oh, it's not profitable, so I will close it. And then we need to understand the consequences of those decisions. So we do have a very unevenly distributed refining capacity in the world, and this means that we will struggle with these problems in various regions to different extents. But everybody will continue to struggle with this for a long time. And I predict that prices will be higher. It'll take a long time before we get back to the $60 a barrel of Brent that we had in January.
Okay. And we'll also have a special briefing specifically on the fuel market at the afternoon coffee break, so I'd encourage you to come and join that. We'll take a question here in the second row, and maybe one more after that, and then we'll be starting again upstairs.
Thank you. My name is Dao Yizhang from the Wealth Magazine, Taiwan. And so, in terms of the Asia Pacific, especially Taiwan, the increasing AI hardware demand does provide margin and profit. And how long does a kind of high-speed growth will sustain, and what kind of impact does it make to cargo or the airline? And do you see the growth also happen in other regions? Thank you.
Yeah, so this is more about 2025, I would say, than about 2026. So in 2025, we came into that year thinking, oh my God, the world's going to come to an end because of the tariffs, right? And then that didn't happen. So how come we did so well in 2025? Partly thanks to you guys and the exports of AI-related products. And the threat of the tariffs that made everybody produce those products at lightning speed. And then thanks to air cargo, we could ship them also at, not necessarily lightning speed, but pretty fast, more rapidly than any other form of transportation. So the combination of the demand for AI-related products and the access to air transport and the threat of tariffs created this unique front-loading behavior. And then obviously the tariffs sort of were, the threat waxed and waned, so to speak. Yeah, so the front-loading actually pretty much impacted the first half of 2025. And actually we ended up with a year that wasn't so bad. So I think that's the miracle that explains 2025, is AI-related exports and coupled with air transport that made the front loading possible, and together we saved 2025. And will it continue? Yes, I mean, I think it will continue, but not with the same sense of urgency, unless we get new threats of tariffs and so on that, you know, created this exceptional front loading. Yeah.
Okay, we have time for maybe one, possibly two last questions. Who wants to ask them? See an eager gentleman in the back.
Hello.
Good to see you.
Ben from Guardian from Trinidad. My question is, you said earlier in the briefing that Africa is a very difficult market to make money off of. Some Caribbean governments have been pushing to re-establish an air link between Africa and the Caribbean. Obviously, the service has to come from the African side. Does that make sense from a financial perspective? Do you feel there's an economist if you
Oh, I mean, I'm obviously, I think, you know, sorry for taking like a mega historic perspective on this, but, you know, if we think about human development, it's always been a multitude of things, of course, but two things in particular, I believe: energy and connectivity. And we're one very unique form of connectivity because we fly, yeah. And I think we can explain the success of the 20th century thanks to fossil fuels and the jet engine. And what's going to create the next economic miracle? Well, we have to, you know, innovate something on the energy front and innovate something on the connectivity front. And this century is obviously struggling with that, yeah, but if we solve those problems, the next century might be amazing. And in the interim, I do believe that everything that we can do to reduce our dependence on fossil energies, improve the production and increase the production of alternatives to fossil energies, and stimulate connectivity in all forms. So not only air transportation, I want cheap, accessible, sustainable transportation and other forms of connectivity for everybody. And when we manage to do that, then growth follows, people's living standards improve, and we pull people out of poverty. When we fail to do that, we will obviously get the opposite result. So Africa should, you know, work on removing visa restrictions, should work on harmonizing and standardizing rules so that it's easier for people to operate across borders. I think I would love to see more intra-African trade and connectivity, but of course if we can also improve connectivity with other parts of the world, that will benefit not only the Caribbean but also the African continent, absolutely.
Yeah. And there's probably a bit of a technological element to that too. We now have small aircraft that can go very long distances. So it's helping to develop some of those long, thin markets that maybe we haven't seen historically.
Absolutely. Good point.
Yep. Are there anyone want to ask a last question? Dina, you get the last question. No surprises.
Hello, Dina Kamen from the National in Abu Dhabi. I was just wondering, based on the numbers we've seen in the industry report with a lot of you know, Middle East performance being in the red, whether you would characterize the Iran war as to be as bad as or even worse than the COVID pandemic for Middle East airlines, and what that would mean for the smaller carriers that have weaker balance sheets. Would we see them going down the road towards bankruptcy or even consolidation in some cases for survival?
Yeah, I mean, it's hard to compare the impact of COVID with anything else for everybody, I think, and you know, that was obviously a global crisis that affected everybody. Here we have a local crisis that's affecting everybody, and it's affecting the people in the region obviously a lot worse than anybody else. And you know, there are some winners also on the other side of things, and I would in the same vein as what we've been saying, I would not expect everything to go back to where it was. I think it will be a challenge for the Middle East to recuperate the shares of global traffic that they had before this crisis. I'm not saying ever, but I think that will take longer than what most people would expect, because once you've lost traffic, it takes a lot of money and effort to try to get it back, and if it's possible to get it back, because people's behaviors have already adjusted in a different way. And then, of course, regarding bankruptcies, I can only state what's normal for any industry. It's the problem for airlines, perhaps in this context in particular, is that because of the long historic, very low margins, airlines don't have particularly robust balance sheets, right? So, okay, this is another discussion with some atypical situations in the Middle East, but for the industry as a whole, for sure, this is an industry with rather weak balance sheets, even if they've improved since the COVID crisis. And of course, if you have crisis upon these weak balance sheets, at some point, clearly the pressure is going to be unbearable. But I'm absolutely not predicting anybody's particular demise. I'm just stating the obvious, that at some point you run out of money and you go bankrupt. And of course, I think in general that it's odd that many regulators prevent airlines from doing mergers and acquisitions, which are allowed to a greater extent in other industries. I don't really understand that sort of discrimination between this industry is allowed to do that and this other industry is not. I'm obviously, I want everybody to have the same rule book everywhere. And I would just want our industry to have access to that option to the same extent that other industries have access to that option. So we can see, obviously that the US market has used that option more than many other regions, and the European market has been prevented from using that option maybe to the same extent. So, and that obviously comes with its own set of implications for how the traffic and the business gets organized. I'm not saying that concentration is better. I'm just observing these differences. And I think that, and I would defend airlines' self-determination rights. Yeah.
Okay, with that, the show's going to start upstairs in about 6 minutes. So, Marie, I don't know if you have some time to stick around if people have some individual questions for a few minutes. And then with that, we'll close this press briefing. I would again invite everyone to rejoin in this meeting room at the afternoon coffee break, when we will have another briefing focused specifically on fuel. So thank you all very much. Enjoy the rest of the afternoon.
Thanks, everybody. Thank you.